And welcome back to another episode of The Credit Authority. Once again, I am your host, Rhonda Kulch, and I am so glad that you tuned in today. We always want to start our segment by thanking our sponsor. So thank you so much to Equity First. If you are experiencing credit and or financial challenges, feel free to reach out to any one of their trained professionals. They are bilingual, nationwide, and they are waiting for your call. They can be reached at 631-714-4822. And now that we got that out of the way, we are welcoming our next guest, my friend Michael Biancaniello with Friedman Law Associate. How are you?
I'm good, Rhonda. How are you?
Good. I know you couldn't get in the studio, so thank you so much for making the time to join us remotely today. So the reason why I wanted to bring you on is, we've had Lee Friedman on in the past, and Lee will speak about real estate law and maybe bankruptcy, a little bit about foreclosure. But right now, what we're seeing is an influx of people that are looking to get back into considering short selling. And I know that that is your specialty. So tell us a little bit about what you're seeing in the market, maybe compared to 2005, 2006.
Sure. Definitely been a lot of changes. Even since the last mortgage crisis in '08, we're seeing some things right now that we didn't normally see. When I first started in the business, we had a lot of clients who were really, really far upside down. Right now, that's not the case. I think a lot of clients who are in the short sale category are kind of right on that line. And that's why I think before any client is considering going down that path, your best bet is to do a free consultation with a law firm like ourselves, just to get a true assessment of what the value of the home is.
I think also what happens is that besides the fact that the market has gotten a little stronger and the values are holding, I'm seeing, at least on our side, that people are no longer 6 years or 7 years behind. I'm seeing clients that are coming out of COVID, or perhaps they were a little bit in default prior to the pandemic, and now their entire world has been reset with updated expectations. Right? They realize that maybe the income is no longer there to support. Tell us a little bit about the process and what the banks are looking for to even consider allowing for a short sale, because you have to qualify. It's not just because.
Definitely. In fact, when you look at certain loan investors like FHA, for example, FHA requires you as part of the short sale review to actually go through home retention review first. The thing that pretty much all lenders across the board are looking for is a lack of affordability. And I think your point about income levels dropping coming out of COVID is 100% accurate. People's regular jobs have taken a hit on salary. Certainly some of their second jobs, the extra positions and hours that they may be getting were cut back. So lack of affordability is going to be the primary reason for someone not getting a modification and at that point being steered towards a short sale. The second thing is obviously owing more than the property is worth. Outside of that, there aren't too many guidelines. It's really about the affordability.
When we speak about the affordability, and you and I go back to, 08, 09, when they had the Making Home Affordable modifications, I still get clients that call me and say, hey, what about that 2% rate? And what I'm finding now is that even the lenders that are doing modifications in lieu of foreclosure, they're not really offering great terms. What are you seeing on your side as far as even modification, as much as we want to talk about short sale? What are you seeing as far as the terms for modification?
Honestly, that's a phenomenal question. And that's going back to your first question about the difference between '08 and now. You're right. Back in '08, really through 2015, there was a whole menu of government-sponsored loan modification programs that simply don't exist anymore. And since rates have risen so drastically coming out of COVID, a lot of our clients aren't seeing the payment relief on the modification side that they were in the past. So in the past, where we had clients who were maybe at 5 or 6%, like you said, we were able to get them down to 2 or 3%. But now, because rates have risen so high into that, 6% level, a lot of our clients are being rejected because their modification is causing their payment to go up. And even the modifications that are getting approved, it's not very realistic for our clients who are looking for relief on payment to actually end up in a higher one. So a lot of clients who are coming to us for modification are realizing that that's not the best solution, and then at that point end up being a short sale.
And you're hitting it on the head. I have a client, his name is John, and we just got him approved for a modification. His business was affected during the pandemic, and he went into default. The lender he was working with, which was Rushmore, they were offering him temporary relief only, and they were not really concentrating on the arrears. And he decided to reach out and look for some assistance. And long story short, he owes $500,000+ on his home, and we finally got a permanent modification, but they re-amortized his existing loan with the arrears at 6.5%. But his original mortgage for the original, not the arrears, was at 4%. So unless he was looking at alternatives, maybe filing a bankruptcy or anything anything else, right? The point is, he said, is this a joke? He says, I applied because I needed relief. I fell into default. They have my financials and they're squeezing me because, again, even the front end and back end ratios have changed. And what we're looking at now is a client that, wants to keep his home, but now the entire loan was re-amortized at 6.5%.
Well, I think that's honestly, if you spoke to a lot of our staff members, especially the ones that have been here a long time, I think that's some of the frustrations that we're seeing right now. Is our law firm, we really try to roll up our sleeves, assess a client situation, and try to find the best option for them. And, we, for a long time, because of the Making Home Affordable program, we were able in some cases to lower clients' mortgage payments as much as $1,000 a month. We were literally changing people's lives, but the landscape has changed so much with regards to the rate increases that relief just isn't there. And that's why I always tell clients when we do a consultation that modification isn't a solution for everyone. And that's why more and more clients are warming up to the idea of short sale, because they realize that, hey, I can unload this asset that is just a weight around my neck. And then at that point, I could reset and then be a purchaser again in the future and be on the right side of things instead of being stuck in a house that you're upside down.
Yeah. And I know it's challenging. And I think that, I know firsthand, I spend a lot of time speaking with our clients about exit strategies and setting realistic expectations. I think that for so long, homeowners were given so much flexibility that they felt that the freedom to not pay their mortgage was going to last forever, right? I mean, you and I both know plenty of people that have had, 5 years, 10 years. I know somebody 11 years without paying their mortgage. At some point, you will need relief, and at some point you will need a professional. So with that in mind, if you need a professional and you are currently in foreclosure, facing foreclosure, looking to buy or sell, I highly encourage that you reach out to Friedman Law Associate. I will say, as an additional plug, they are my personal attorneys. I use Lee for all my personal real estate transactions. Michael, how do they reach out to you and Lee over at the firm?
The best way to reach us is our main number, which is 631-648-9428. You could always reach me. I'm extension 318. And you could always go to our website, which is friedmanlawpc.com.
I love it.
I can't thank you enough.
No, thank you so much for coming on, and I will hope to see you soon.